If history is anything to go by, 2004 onwards, 2004, 2003, that's the large cap weightage, but I just want to bring the election cycle.
Correct.
Nifty in 1999, 6 months ahead of the election, 36%, 2004,
Correct.
9%, when it was given that BJP was coming.
Yes.
Yet market rally.
Yes, market rally.
2009, we came off that 2008 GFC crisis.
Surprise, yes.
2014, अब की बार मोदी सरकार.
Correct.
And फिर से एक बार मोदी सरकार, yet markets rallied.
Yes.
For hat-trick Modi Sarkar, can the market rally again?
In fact, the analysis is quite interesting because we'll concentrate more on 2014 and 19 where the markets first were taken by surprise. We moved on to 19% 6 months prior to the elections, 1 month post the elections and 6 months post the elections. The data is extremely positive in these two aspects particularly, which means 2014 prior to the election, 6 months prior, we were up 19% on the index. 2019 we were 11% to the on the index. What happened 1 month from there? 2014 we were positive on the index by double digits. 2019 we were just up 1% to 2% broadly on the index because we went through a bit of a saturation on the indices. But the data in the next 6 months is extremely positive for both of these counts as well. So what this tells you, the way in which markets enters into the results, the election results, is the way in which the market exits after that 6 months of results.
Now Kunal, Nifty is rallied anywhere between, this is anywhere between 9 to 38%.
Correct.
That's a very long kind of range. So where do you think this range will settle for this time?
So I would look out for somewhere closer to this double digit. So maybe an 8 to 9% averaging out. If you look at this over here, so even if you do a simple average, it's around 8% approximately. So the way in which the markets have entered in the last 6 months, amidst all of that global negativity, etc., we're still up some 7% to 8% broadly on the Nifty.
12% is what I saw. YTD.
Yeah, so I'm looking at it from the October low specifically because that's where the major turnaround is for the indices. And now going forward, I would believe a similar kind of a percentage is what we can expect from current levels.
But Kunal, interestingly, now let's look at this is 6 months after.
6 months after the election results.
Now 6 months after also in 2014 the gain sustained.
Correct.
2019 the gain did not sustain. I mean 2% is actually hardly a return. So what are the chances that a 2019 pre-market rally and a post-market dampener could be at play this year?
Very interesting question, Nikunj, but I believe frankly that this may not happen this time. I mean, this number may not happen this time around. And the clear reason for that is, as you were mentioning, large cap underperformance. Yeah. So we did not have large caps participating in this last entire 2000 point rally. And now we have large caps which have started to blossom, which means that the good part of the market rally is still ahead in front of us.
Use a marker and tell me out of the 3 stocks here, which would be the strongest one? Which would be the strongest one if one has to rally on a pre-election rally?
See, I would bet on, I'll maybe pick 2. I'll bet on this and I'll bet on this.
Okay, so Kunal feels that if you are looking at a pre-election rally, then you got to go back for basics. Basics is you go for a heavyweight, which in a sense is the bet on Bharat, that is HDFC Bank, and then you bet on the new Bharat, which is ICICI Bank.
Absolutely.
So both in this case, they are actually giving you insurance.
Correct.
They are giving you retail banking. They are giving you a play really on lending, and they are giving you a play on how India is going to move. So bet on the Bharat and bet on the new Bharat. Just bet on banks and keep it very simple.
Exactly.
Okay, I'm going to flip it around and talk about valuations, Kunal. And just to get in a perspective here, I may sound slightly repetitive with this one, but the point we're trying to make here, Kunal, is that prepare yourself for a rally. But maybe the best way to participate in that rally is to take some chips off the table, not chips off the table in this case, ampute some part of your small and mid cap portfolio. Now, Kunal, maybe you want to use a marker again here. Me and Kunal are, by the way, sharing a marker. That's a bro bond we have, right? So Kunal, this is the point we are trying to make here. Look, Nifty is trading just in line with its 5-year average.
Correct.
Earnings in last 5 years were subdued. Now earnings are in full bloom.
Yes.
Small cap index is trading way above its 12-month. It's 3-year average and 5-year average. So word margin of safety, I think is here.
Is more towards here, yes.
Right? And can I, if may just, so guys, just remember this. I'm just going to make this point here. This is the 5-year average for the small cap index. This is the current average, which means you're trading at a premium. And that premium is unlikely to sustain.
Correct.
So my limited point here is that right now, bet on the market uptrend. Kunal feels that the market would rally into the run-up to the election And because the starting point, if it is today, valuations in large cap stocks are attractive. So that is what you should be bet on. But if you don't have cash, maybe take 15-20% chips on the table, off the table in a small cap index.
Yeah,
and then
absolutely.
bet
I
on
think
them.
it's a very good time to try and book out profits over here and shift the money back towards here. In fact, a classical day like today, where the small caps and mid caps are relatively not doing well. I'm talking of it as a portfolio perspective, but the large caps are doing exceptionally well today.
So let's high five on that. Thank you very much. It's just been, gate reckoning. And I'm just going to go back to my seat. Taking the pen by the way. Go back to my seat, and here's an excerpt of our conversation with Swaminathan Ankleshwar Swami, or the author of Swaminomics, and we actually spoke to him pretty much the same thing, that based on the outcome of the assembly election, how should one really read into what could be the mandate 2024?
Yeah, I would say from the point of view of, I can understand Indian investors getting a little more charged up with this, but the foreign investors have already built in the notion that Modi is getting re-elected in 2024. That being the case, they don't really see that the state election would have changed things very much. Even if the BJP had done somewhat worse and lost a state or two, I don't think for a minute they believe that Modi will not return very, very solidly. That's why I thought that, foreign markets may not get charged up by this news. It's already built into their expectations.
Suresh, the question which we are addressing and debating and deliberating, I think I asked you this in the morning, but no harm in repeating the same again. Stay with the trend. Trend is your friend. Trend is on the upside. The direction and the momentum, I think, is quite pronounced. But when you have to choose the opportunity cost versus risk, is it time to take 15, 20, even 25% profits off the table from small and mid cap stocks and simply park them in large cap stocks?
So there are two parts to when you take a cash call or you take a call of shifting. So it's not just about shifting, say one can go on 20% cash, but the real call is, will you be able to deploy the same money back on a decline? Or when do you take the call to again move back to small caps? And in that case, the optimization is not huge. Say, for example, even if you expect a 10% correction and you've pulled out 20% from your mid cap, small caps, you will save something like 2%. And maybe your, large caps do not fall much. But if you don't deploy, by the time in the next 6 to 12 months, if the small caps and mid caps do well, and some of your stocks in that basket which you removed could actually go much more. So one has to stick to the asset allocation unless and until one is very, very cautious about the markets, wherein say if you think it is as crazy as a 2007 or a 2017, which I think we are not there. Say the last 2 year returns are not great on the benchmark indices itself. We were at 18,000 levels in 2021, and we are still not even at 21,000 after 2.5 years roughly. So the view is stick to the same allocation, and if you want to shift to it, be ready to again take a call maybe a couple of months or 6 months down the line to again get back into small caps and mid caps.